My name is Adrian Hall. I am a mortgage loan officer with Movement Mortgage. I've been in finance for about 9 years now, specializing specifically in residential mortgages, first-time home buyers, and secondary home buyers, people who have, owned a home for a few years and now they're upgrading to their next home because their family has changed or the dynamic or space or whatever. THDA is the Tennessee Housing Development Agency. It's basically a state program. Their whole goal is they incentivize homeownership for people who may not have access normally. So, for instance, when I bought my very first house, I didn't have, 20% down or some large down payment. So I utilized the down payment assistance program so that I could afford to buy a house. THDA helps, that's one of those programs, they help people obtain homeownership. People who qualify for THDA typically are either first-time home buyers or they've not owned a home in the last 3 years. There are income guidelines as far as, what county you're in, because they do want you to not be earning a substantial income. They want you to really need the assistance, so to speak. Beyond that, as long as you've not owned a home in the last 3 years, you more than likely are going to fall into that bucket. So income qualifications, it depends on the household size. The larger your household, the more that they'll allow you to earn since you are supporting more people. I think for a household of 2 in Knox County, it's $69,900. So the goal you want to hit is 640 or higher. There are 3 credit bureaus. There's Experian, TransUnion, Equifax. You want to make sure that at least 2 of those 3 credit scores are 640 or higher. If you're not quite there, we can figure out ways to help you get to that point so that you can qualify. So if you're using the THDA program, you do not need a down payment. Essentially, they will supply your down payment plus a little bit for closing costs. So if you are negotiating with a seller, you want to buy a house and they won't cover all of the closing costs, THDA can help kick in and cover some of that for you so you can move in out of pocket. They provide, everything in mortgage world and real estate is percentage based, so they provide 5% of the purchase price. Typically, the down payment required is 3.5%, so if you get the seller to pay all of your closing costs, then you'll have all 5% to be used towards your loan. If not, then you can do your 3.5% and then the rest will go towards the closing costs. But either way, that's the assistance they're providing. That's not what you have to come out of pocket. If you sell the house or you refinance the house, they do seek that back. Whenever you're going to use the THDA program, you definitely want to make sure you're going to be living there for a few years. If you are thinking about living there for just a short amount of time, that might not be the best option, and that's something that I can help you figure out. But if you know you're going to be living here, quite a few years, 5, 10, 20, 30 years, then once you reach the point that the mortgage is naturally paid off, you will keep all the assistance. You don't have to pay any of that back. So the interest rates, THDA does set it statewide, so no matter what lender you go to, you'll get the exact same rate. So as a first-time buyer, it makes it a lot easier because you're not having to worry, are you getting a bad deal or not. They don't really charge anything extra. I know when I bought my first house, that was a concern I had was, am I paying a higher rate because I don't have a down payment? So thankfully that's not a problem, but the rate does change every so often as the market changes. So whenever you're ready to buy, definitely sit down and figure out what the rate is at that time. Mortgages are very heavily regulated. There's a lot of programs, there's a lot of options. As a buyer, don't think that you have to remember exactly which program you want. It's not like going to McDonald's where you have to have your order ready when you show up. If you aren't quite sure, just tell your loan officer, hey, here's my situation, here's my goals, here's what I want to achieve, and they can help you figure out what program will be the best suit for you.
There's the end right there.